Well, Jim Brogan with Brogan Financial joins us this morning, and we're going to talk about the financial outlook of this year. We got to talk money this morning.
Absolutely.
So we're going to start off talking about how you think that the extension of the Bush-era tax cuts will be affecting folks this year.
It's very good. I mean, it means people will have more take-home pay than they would have had. I mean, this would have affected all taxpayers pretty much. So people are going to have more money to invest and to spend than they would have had. And with the reduction in payroll tax, their take-home checks are actually going to be going up. So that's a good thing. And also discretionary spending is up. People are starting to spend more of their money. They're starting to invest more. You know, small business owners are not going to see their taxes increase. So hopefully they'll start to unfreeze some of that money and start to hire people again in the East Tennessee community.
And so now if we want to go and take an overall picture of the outlook for 2011, what would you say about that?
For 2011, things appear pretty strong. Corporate profits are up. As I said, people are spending more of their money. So consumer confidence is definitely up. But I think caution is still the word of the day. I mean, we still have very high unemployment. We're still in the midst of a housing crisis. Foreclosures this year are expected to be even higher than they were last year, which was an all-time record high. And you know, over in Europe, there's a debt crisis that is really a ticking time bomb. And if it goes off, it could really have implications all over the world. So I think caution is still the word of the day.
And so, speaking of caution, what's the best way to go about doing that? How are you cautious with your money this year?
Yeah, I get asked that all the time. I still monthly meet with people that, you know, 2 years ago they say, Jim, you know, I sold all my stuff. I went to cash because they were scared. And now it's, you know, what do? I know I need to do something, but I don't know what to do, and they're still uneasy. But we're seeing, you know, positive outlook for 2011, but we've still got these concerns. And so I think the thing is that you definitely need a plan to be reinvested into the market. I think you have to be careful about how you do that. It doesn't mean you just go all in on stocks or all in on stock mutual funds. I think you need a lot of balance. You know, when people talk about stocks and bonds, I think you need more than that. You need foreign bonds. You need a lot of different things like energy and precious metals, things that don't move together investment-wise. So if one of them's way down, like stocks, doesn't mean they're all way down. So got to be very balanced and cautious about how people reinvest their money.
Diversify, as they say.
That's the key word. Yes,
all right. Thanks so much for all the advice, Jim, this morning.
It's my
Appreciate
pleasure.
it.